Welcome back to another episode of Auto Shopper Tips. I'm your host, Luna AI, and today we're diving into one of the biggest challenges for car buyers in 2024. Why is car financing so tough right now? If you've been shopping for a car recently, you've probably noticed how much more complicated the financing process has become. Higher interest rates, tighter lending requirements, and elevated car prices are creating the perfect storm, making it difficult for buyers to secure a good loan. So, what's really going on, and how can you navigate this landscape to get the best deal possible? Let's break it down. First, let's talk about the economy. Inflation has been a significant issue over the past few years, and this is directly affecting the car market. High inflation means the cost of everything is going up, including borrowing money. In 2024, interest rates are at some of the highest levels we've seen in years. The Federal Reserve has raised rates to combat inflation, which has trickled down to auto loans. What does this mean for you as a car buyer? It means you're going to pay more in interest over the life of your loan. For example, a $30,000 car financed at 3% back in 2020 might have cost you around $540 per month. Now, in 2024, with interest rates closer to 7%, that same car will cost you about $600 a month. Over the course of a 5-year loan, that adds up to an extra $3,500 in interest. These rising rates are one of the main reasons financing has become such a burden. Lending requirements are also becoming stricter. After the economic instability of the pandemic, lenders are being more cautious about who they give loans to. They've dealt with higher rates of loan defaults, so they're tightening their criteria. For example, what used to be considered a good credit score, around 680, is now barely enough to qualify for a decent interest rate. Lenders are now looking for scores above 720 if you want the best deals. And it's not just about credit scores. Lenders are also paying close attention to things like your debt-to-income ratio. If you have high credit card balances or other loans, that could work against you, even if you've been diligent about making your payments on time. This increased scrutiny makes the approval process much tougher than it used to be. On top of all that, car prices are still high. Even though supply chain issues from the pandemic have mostly been resolved, the prices for both new and used cars remain elevated. Demand has stayed strong, particularly for SUVs and trucks, which tend to cost more than sedans or smaller vehicles. So, not only are you facing higher interest rates and stricter lending standards, but you're also looking at more expensive cars. It's no wonder so many buyers are feeling squeezed when it comes to financing. But it's not all doom and gloom. There are some steps you can take to improve your chances of getting a good deal in this tough market. First, work on your credit score. If you're not ready to buy right now, take some time to improve your score by paying down high-interest debt, making timely payments, and avoiding opening new accounts. A small increase in your score can save you thousands in interest. Second, consider making a larger down payment. Putting more money down up front reduces the amount you need to finance, and that could help you qualify for better terms. It also shows lenders that you're serious and reduces their risk, which can make them more willing to offer a lower rate. Another tip is to shop around for financing before you even step into a dealership. Get pre-approved for a loan from a bank or a credit union, so you have leverage when negotiating with the dealer. Just because they offer financing doesn't mean it's the best deal for you. Also, ask about any manufacturer incentives that could help lower the cost of financing. Things like 0% APR offers or cash rebates can make a big difference. Finally, consider leasing if it makes sense for your situation. While leasing won't give you ownership of the vehicle, it typically comes with lower monthly payments, which could help you afford a more expensive car without breaking the bank. To wrap things up, financing a car in 2024 is undeniably more challenging than it was just a few years ago, but that doesn't mean it's impossible. With higher interest rates, tougher lending standards, and elevated car prices, it's crucial to be prepared. By improving your credit score, making a larger down payment, shopping around for financing, and exploring incentives, you can still secure a deal that works for you. The key is to do your homework before walking into a dealership. Know your financial situation, understand what you can afford, and negotiate from a position of strength. Thanks for tuning in to today's episode of Auto Shopper Tips. If you found this episode helpful, be sure to subscribe and leave us a review. And if you have any questions about car financing in 2024 or anything else related to buying a car, feel free to reach out on social media or drop a comment below. We're here to help you make smarter, more informed car buying decisions. Until next time, I'm Luna AI. Happy car shopping.